Welcome back to Made Simple. Today we're going to be talking about the price to earnings ratio, or more commonly known as the PE ratio. But before we begin, please subscribe, smash that like button. It helps me out so much more than you know. Alright, so the PE ratio is a ratio commonly used when you're looking at stocks. If you open up your Robinhood app or whatever platform you use to trade stocks on, you're going to see most of the time you click on a stock and it's going to have a PE ratio. So let's talk a little bit about what that is. But before we kind of explain what it means, we need to learn how to calculate it. So there's a simple formula for calculating the PE ratio, and that is the market price per share divided by the earnings per share, or EPS. So this is the simple formula. Let's talk about the two parts. So the market price per share is the stock price, or the current stock price, divided by the earnings per share, or the EPS, which is also commonly recorded when you're looking up a stock. And to show how to calculate it, what we're going to do is let's use two examples. Let's use the ticker symbol APPL, which is Apple, as well as the ticker symbol for Tesla, TSLA. So we need to know, when we look it up, we need to know the market price per share, and we need to know the EPS, or the earnings per share, in order to get the PE ratio. Going here, I have this chart pulled up on Yahoo Finance here. This is the stock Apple. So we know the current price is $134.71. So we'll go ahead and plug that in, $134.71, and the earnings per share, as found here, is 4.45. So 4.45, and all we would do is simply take the market price divided by earnings per share, and we get 30.27. And we can even double check this by looking here at the PE ratio Apple has, and it's 30.32. So not exactly what we calculated, but the reason behind that is because this isn't updated. The PE ratio here is not updated with the fluctuating stock price. So that's the only reason we differ a little bit. So moving on to here, Tesla, we can see that the PE ratio is super high compared to what Apple's was. But let's use the stock price of 680. Well, it looks like 685. We'll just do 685 even to keep it simple. So 685, and then the earnings per share is exactly 1. So we have an easy calculation here, 685 divided by 1, which is 685. And we'll look, the PE ratio is pretty dang close to 685 depending on what the current stock price is. So we know that the calculation is fairly accurate for the PE ratio. All right, so now that we've calculated and we know how to calculate the PE ratio here, let's talk about what a PE ratio means. So a PE ratio relates that company's stock price, or market price per share, to its earnings per share. It's basically a way to easily compare the value of a company. So the PE ratio, let's say, well, in this case, Apple's is 30.27. That means that Apple's stock price is trading at 30 times their earnings. It's safe to assume that a lower PE ratio would mean that the company is near normal value. It's trading at its earnings, right? So in this case, Apple is trading 30 times above what its earnings is. Tesla is trading at 685 times what their earnings are. So if this PE ratio is high, this could mean one of two things. This could mean that the stock is overvalued, or investors think that in the future there's going to be some crazy growth in the company that will then be reflected in earnings later on. All right, so now let's talk about determining if a PE ratio is really considered high or not. So going back here I just have a graph of the average S&P 500 PE ratio. So in 2020, it was 45.45, and over the course of the stock market since 1917, the average PE ratio has been 15.94. So you might look at this and say, well, hey, Apple has a lower PE ratio than the average S&P 500 last year. But in the long term, that might be considered a little bit high. So you can kind of do some cost analysis that way and kind of see, it's kind of like an apples to apples comparison, showing the market price and the earnings per share. It's just putting it into similar terms so that it's more understandable for investors. Now looking here at Tesla, it's trading at 685 times earnings. Now that is a huge PE ratio. So just looking at this PE ratio, you might think that Tesla is insanely overvalued. But maybe they're doing things now that it's really going to translate into their earnings in the future, so people are willing to spend way more in order to own part of this stock. So that is the PE ratio explained super basically. One more thing to know before we finish the explanation on this is that a lot of times companies, especially newer companies that have recently gone public that are trading on the stock market, might have negative or no earnings at all, or no EPS available. So if they have a negative EPS or no EPS available or earnings per share, then there will be no PE ratio. So just keep that in mind. But overall, the PE ratio is just comparing the market price to the company's earnings. It's just a quick snapshot into kind of comparing the company in an apples to apples way. Alright, so I hope you enjoyed this video. Hopefully this explanation was super clear. If you have a comment, please leave it below. Smash that like button and subscribe. Have a great rest of your day.